Let us now look at assessment criteria 2.2 for societal impact. So here in this unit, we're going to explain the structure of a business case and prioritizing societal and environmental change by looking at business objectives. Here are the indicative content. As you can see, many discussions surround the practical nature, but there are some important theories like stakeholder analysis and return on marketing investment. So the long-term focus of the triple bottom line. Now we have learned what the triple bottom line is: profit, people, and planet, the three Ps. We've understood that not only should companies focus on economic profit, where you generate wealth to shareholders, the company must also, profit is here, right? Economic profit to shareholders. The company must also consider the planet and people. So planet means the sustainability of the environment, and people means society. So you need to achieve initiatives that you undertake from each of these areas to ensure the triple bottom line is institutionalized within the organization. Now, the challenge here is, I'll tell you the practical challenge, because I've also tried to practice the triple bottom line in organizations. The problem most often to spend money on the environment and social initiatives and to balance your profitability to your shareholders, because shareholders sometimes don't see these as important investments. Sustainability and social spending, planet related, environment related spending, the shareholders think they are not necessary. Why don't we spend that money on ads? Why don't we spend that money on digital to improve sales? Why are you wasting money here? So that is an important conversation. That's a reasonable question, because whatever you do to sustainability and society may not give you short-term gains. It will build your corporate brand. It will improve your overall perception of your customer. But that is a long-term effect that it will have on the organization. So it's a huge challenge to prioritize between the short-term goals and sales and objectives and the long-term need to spend on societal marketing, the planet and people. So it is important, therefore, for us to integrate whatever we do with regard to societal, social, and environmental impact. How do we integrate the triple bottom line with your business strategy? Because then you will see your business strategy is a holistic strategy that encompasses the triple bottom line, and it is integrated as opposed to it being separated. So in integrating the triple bottom line with regards to people, that is social impact, you can integrate it with the business strategy by prioritizing employee well-being, diversity, fair labor practices, and you can engage in corporate social responsibility initiatives, foster community development and ethical supply chains. But you have to use these credentials, these initiatives that you do after that to communicate to your customers, your suppliers, your distributors, and leverage these strategic initiatives. Environmental related activities, planet, implement sustainable resource use, carbon reduction strategies. Obviously, if you can in the long term focus on this, you can reduce costs, invest in the circular economy models, recycling, waste reduction. All that will also focus on cost reduction, develop eco-friendly products and sustainable packaging. So these are all activities that you can undertake in the triple bottom line that has to be integrated with your business strategy. It should not be seen as two separate strategies. It should be integrated so that it is one. And the benefits of the triple bottom line. So there can be so many benefits. Implementing the triple bottom line in organization, which is a sustainability driven business model to attract consumers and investors, can result in a competitive advantage. But it must be practiced genuinely and positively. Cost savings. Obviously, when you are recycling, when you are removing inefficiencies, when you are eliminating waste, all that will result in cost savings to the organization. So it's a huge benefit. Investor confidence in ESG initiatives. A lot of investors would like companies that are socially responsible with a good ethical governance stance. Your regulator will look at you positively. Regulatory compliance and risk reduction, especially if you look at banks, telco, and other regulators who regulate industries. Long-term profitability. Sustainable business models ensure resilience against market fluctuations. Stronger employee engagement and retention. A positive purpose-driven culture will attract and retain top talent. That is a huge problem right now in Sri Lanka. Enhanced brand reputation. Obviously, can you see the kind of companies we're talking about here? Patagonia, Dove, Johnson and Johnson. We're talking about Pampers, Lego, Microsoft. We're talking about companies like Starbucks, Body Shop. So those are world-renowned companies. And they are renowned because they have practiced proper, responsible, and ethical marketing practices. So that will have a knock-on effect on their corporate brand. Diversity, equity, and inclusion improvements. Positive community impact. Long-lasting impact that you'll have on communities. Reduced carbon footprint. And sustainable use of resources. So these are some of the critical benefits of applying and practicing the triple bottom line in your organization. Think about your company. Maybe you are already practicing the triple bottom line principles in your organization that you are not aware of. Right? Now, what are the risks of the triple bottom line? So whilst it brings about some benefits, obviously you can also say that anything that will bring about some benefits will also have some demerits, some issues. So here are the risks. Obviously, you have higher initial costs for sustainable investments. Think about renewable energy, ethical sourcing. These can be very expensive exercises. Your return on investment or ROI can be uncertain. And measuring the financial impact of social and environmental efforts can be difficult. So this is a very valuable point. These are the things that shareholders are sometimes concerned about in spending money for sustainability. Competitive disadvantage. Companies focusing heavily on sustainability may struggle against cost-driven competitors. So if you have a competitor whose focus is to reduce price, But if you spend a lot of money on sustainability and environment, all that, your price point might be higher. So you lose market share and a competitive advantage. Regulatory compliant costs. This is a problem as well. Supply chain disruptions, sustainable sourcing may limit supply options or increase costs. This is a big problem. Lack of standardized metrics, measuring and reporting the triple bottom line success can be inconsistent across industries. Resistance to change from employees, shareholders, or customers may resist sustainability initiatives if they perceive them as costly and unnecessary. And finally, balancing priorities. Companies may struggle to align social, environmental, and financial goals without compromising performance. So you can see there are a lot of problems, challenges, risks in implementing the triple bottom line. Theoretically, you can say it is important to implement, but there can be some challenges. Let us now look at stakeholder analysis. Of course, we have done this before. There are three stakeholder types. You have internal stakeholders, connected stakeholders, and external stakeholders. Who is a stakeholder? A stakeholder is an individual or a group that can impact the organization's activities or be impacted by the organization's activities. That is a stakeholder. And you need to study the definition as well as the three types of stakeholders: internal stakeholders, connected stakeholders, and external stakeholders. Now, stakeholders have different expectations, right? We looked at this before as well. Customers are important stakeholders. They want service, value for money, and product quality, right? Employees are also important stakeholders. They want job security, compensation, and job satisfaction. Government is an important stakeholder. They want taxes and for the company to create employment. So each stakeholder will have different expectations. We call this the stakeholder expectation analysis. The stakeholder expectation analysis. Then you have the Mandela matrix, also known as the power and interest matrix. So the Mandela matrix is a theory that takes power on one side, high and low, and level of interest on other side, high and low. So high power, high level of interest are key stakeholders, key players. Low power, low level of interest in the business, those stakeholders manage with a minimal effort. So high power, high interest are the key players, the key stakeholders. Low power, low interest are anyone that comes here. Manage with minimal effort. And high power, low interest, keep them happy, keep them satisfied. And low power, high interest, keep them informed. But these guys, the key stakeholders, key players, those guys you need to manage very, very carefully. Right? So that is the Mandela matrix, also known as the power and interest matrix. So when we talk about stakeholders, there are important stakeholders. And when it comes to CSR practices, there are critical stakeholders like your employees, your customers, society, and the marketplace. So your employees, their families, customers, current and future customers, Future customers are called potential customers. Socially, society, the community that you operate your business in, the environment, and the marketplace, your partners and competitors. So all these are key CSR stakeholders that you need to manage. And when we talk about the stakeholder concept, we talk about the three levels of it. We have the stakeholder responsibility, but before the stakeholder responsibility, you have the stockholder responsibility. That is the shareholder. You need to make sure your business is profitable. So as managers, we need to run the business profitably. Your first responsibility is towards your shareholders. And after you're making good profits, then you have to think about the stakeholder responsibility, your suppliers, distributors, employees, customers. Then the bigger concept is societal responsibility. So after you fulfill this and this, you can think about your philanthropy, the social responsibility, right? Spending money on societal, environmental activities. But if you try to do that without thinking about your stakeholders, or you try to do that without thinking about your shareholders, then your business will fall flat. Okay? And then we look at what are the resources that are required to implement the triple bottom line. Now, the triple bottom line is spoken of a lot in this course because it is the most important tool in societal marketing. So, what are the resources you need to implement the triple bottom line? So, the resources means the investments, the money. So, you need to invest in sustainable practices, renewable energy, eco-friendly materials. Costs a lot of money. Funding for CSR activities. You need to allocate a budget. Compliance costs for regulations. R&D costs. You need to sometimes hire experts and consultants. You need to train and develop your staff for sustainable practices. CSR teams. Diversity and inclusion specialists. Sustainable production technologies. Waste management, recycling, those machinery and equipment will cost a lot of money. Data analytics for ESG tracking. Automation, AI for process efficiency. Renewable energy sources like solar and wind will cost a lot of money. Sustainable raw materials and maintaining and managing an eco-friendly supply chain. All these are very resource-intensive things that you do. So you need to be careful. You need to be mindful. You need to understand the return on investment, which is the next slide. Financial analysis, including the budget and return on marketing investment. So when you talk about the investment, you need to invest capital, shareholders' money. So when we talk about investment, we talk about capital expenditure investment and operational expenditure investment. So we call it CapEx and OpEx. Capital expenditure, CapEx. Operational expenditure is called OpEx. So you need to make both forms of investments in sustainability marketing. Example, your capital expenditure investments can be the infrastructure, solar panels, green buildings, eco-friendly machinery is all capital expenditure. So in the balance sheet, you have capital expenditure investments. Then your technology investment. Right? So your technology investment like AI, automation, sustainability tracking software, all these things are CapEx investments. And then you have R&D related investments. So for operational expenditures, you can use your budget and spend on CSR and community programs, training and development, supply chain initiatives, carbon footprint reduction efforts, ESG certification fees, regulation and compliant legal costs. So these are all OPEX expenses. And these are the bigger capital expenses that you need to use your shareholders' capital. That is why it is important that you make the right kind of decisions in investing and thinking about the return on marketing investment. So a basic budget will look something like this. Here's a cost benefit analysis where you'll have the initiatives on sustainability. So you can see the 4 initiatives here. The initial cost example of renewable energy, solar and wind. What is the annual savings? What is the revenue impact? What is the payback period? How long will it take for you to break even? How long will you take to start having returns on your original investment? Waste reduction and recycling. Again, you can see a payback period and the revenue impact. Energy efficient machinery, sustainable packaging. So one needs to understand when spending money, you're using the shareholders' money, you're using your marketing budget. It can be capital expenditure or operational expenditure. But you need to understand the initial cost, yes. So you'll tender, you'll get fine suppliers. But importantly, you need to do a detailed feasibility or a cost-benefit analysis to understand the cost versus the annual returns. And what is the payback period? When are you going to break even? What is the return on marketing investment, which we call ROMI? I hope it's clear. I hope it's clear. So what are the critical success factors for implementing the triple bottom line? In other words, what are the factors that are critical to succeed in delivering the triple bottom line? So you need strong leadership and commitment, obviously. Leadership must drive the sustainability agenda. A clear vision and goals, defined objectives. Accountability is very critical. Accountability, especially your ESG committees, you'll have subcommittees. Employee involvement in terms of training and development, incentives for sustainable practices. Supplier partner collaboration, sustainable sourcing and fair trade practices, balanced investments, ensuring sustainability initiatives contribute to long-term profitability. So the integration that we spoke of before. You need to do a feasibility, a cost-benefit analysis, have clear policies and procedure manuals on the sustainability standards, innovation and R&D, development of eco-friendly products and services, and finally establish KPIs, key performance indicators, metrics for social impact, carbon footprint, and economic performance. So if you do all this, your activities for the triple bottom line will succeed, and you are measuring the progress in implementing the triple bottom line in your organization. So here's a Gantt chart. What do you mean by a Gantt chart? A Gantt chart is when you have activity over time. So you have activities on one side, a timeline on the other side, and the chart will show when are you stopping and starting each activity. So you can see define sustainability goals is the first activity. So when are you starting? When are you stopping? Stakeholder engagement, baseline assessment, develop KPIs. So it's like a project plan. When are you starting and stopping each activity? And a Gantt chart that will show activity over a period of time. Project managers, marketing managers will use this to manage the project timeline. And finally, we talk about the accountability and responsibilities for implementing the triple bottom line. As you can see, not only one person can handle this as a project, because there are a lot of initiatives you need to handle in implementing and practicing the triple bottom line in the organization. So you'll have the project sponsor, like the CEO, ensures alignment with business goals, provides funding and resources, will get board approval, will be the champion for CSR, approves major milestones and changes. Then you'll have a project manager, coordinator, develops and maintains the Gantt chart, the project plan, aligns tasks, set dependencies for each task, monitors the progress and updates the timeline, communicates about meetings and all the other minutes and all that. Then you'll have department heads. They will take everything to their own departments, ensure that team members are compliant, they are assigned tasks, identify bottlenecks, and report to the project manager. Then you have team members, executives assigned to tasks with deadlines. And finally, you have the broader stakeholders who also will contribute to implementing the project plan of the triple bottom line in the organization. So when you have a large team implementing, there's cohesion, there's accountability, and you do this as a team, which is very important exercise within the organization. All right, that concludes assessment criteria 2.2. I will see you in assessment criteria 2.3.